Good morning. This is Mary Ellen McGonagle, and you're watching the MEM Edge show. This is the show where we put you in front of where the action is in the broader markets. Let's go ahead and get started with what we are going to be reviewing today. As usual, we're going to take a look at the current markets, review where we are with an eye toward uncovering whether the markets are in a healthy position as far as for your investment decisions for the week. And today I'm really excited. We have a special guest. Renato Leggi from ARK Invest is here. We're going to be reviewing ETFs, and these are really special ETFs. They uncover disruptive technologies and disruptive healthcare and other industries, and just incredible track record, these ETFs. So we are going to be reviewing that. So let's go ahead and get started. Take a look at the current markets, review where we are right now. We're looking here at a daily chart of the S&P 500. So each bar here is a daily look. And what I'm pointing out to you here is the broader markets. We certainly are still in a very healthy position here. We can see that the S&P 500 is finding support at this upward trending 10-day simple moving average. Your RSI is still quite positive. It's up above this net neutral 50. Let's take a look at the stochastics. This is another momentum indicator. They're still up above that net neutral 50 as well in positive territory. We did hit a new high earlier last week. The markets pulled back from there, but we're still in very good standing as far as the broader markets. I've highlighted the May pullback just as an indicator to be on the lookout if we were to see these same dynamics where the broader markets break below these simple moving averages. In this case, the red line is your 50-day. That's very concerning if that were to occur. And then in conjunction with an RSI and MACD potentially turning negative. But certainly for now, the broader markets are very healthy, in good standing. Let's just take a quick look at certainly some of the other areas of the market. I'm going to take you to a candle glance view. And what that will do is provide you, or us certainly, with a more refined look at the broader market. So what I've done here is populated this candle glance view with ETFs as well as the other broader market indices. You can go ahead and add an indicator here. I've added the RSI, that's your relative strength indicator. Sort that by descending. So very quickly, we can really get our arms around where the strength is within the markets, drilling down to the weakness. So this upper left hand portion is your stronger areas. We can see consumer staples surprisingly really up here in the forefront. Let's take a look at gold stocks. Gold certainly had a very good return here in June, and it has picked up certainly last week again. Gold stocks are hitting a 6-year high in price. And then from there, we can see healthcare stocks still languishing. This is an area that has really in fits and starts, but there are certainly pockets of strength within healthcare. I think we're going to get a little bit into that as we move on. So let's go ahead. I'd like to jump right in and introduce to you Renato Leggi. He is a client portfolio manager with ARK Asset, and we're going to be reviewing how you can diversify your portfolios, your holdings, by using ETFs. And what we're reviewing today are not, I would argue, your standard ETFs. These are very highly engaging ETFs in the sense that they are focused on what we call disruptive, again, innovative areas of the broader markets. They're very actively managed. So how are you today, Renato?
I'm doing well. Thanks. Thanks for having me,
Super.
Mary Ellen, on the
Oh,
show.
absolutely. This is very exciting. This, from my work, is an area of the market where you can certainly add some real oomph to your portfolio with these types of ETFs. They are focused on, well, certainly I'll go ahead and let you take it from here and give a better
Sure.
sense. Yeah.
No problem. So a little bit of a background on ARC. So we are based in Manhattan. We were started in back in January 2014 by our founder, Catherine Wood. And so we have now today roughly 9.5 billion in assets under management. 3 billion is in our 7 ETFs. So we have 5 actively managed ETFs and then 2 passive index-based ETFs, which I'll touch on in a little bit. But just as far as background on ARC, so we are focused solely on disruptive innovation in the public equity markets. And we also are focused on pushing our research out there in the communities that we're researching, and for our investors to read and become informed of these opportunities. So our team is organized very differently than your traditional asset management firm. Our analysts are cross-sector in the innovation themes to really capitalize on these technology innovations that we think will create multi-trillion-dollar opportunities over the next 5-10 years. And so these analysts, which I'll show you a picture of them, are really focused on the underlying technologies in these innovation platforms in the areas that they're researching. So for instance, James Wang is covering artificial intelligence and next generation internet. He spent 9 years at NVIDIA, one of the leading AI companies. So he's very comfortable with this space. He's also, all of these analysts are actually using social media, especially Twitter, to push their research out into the communities that they're researching. Another great example would be Manisha Samy. She's our genomics revolution analyst. She spent 8 years at Stanford University's biology research lab. 4 years in high school, 4 years in college. And so she's very comfortable with stem cell technology or stem cell research and technology, and also CRISPR gene editing technology, which we're focused on a lot. And you'll see a lot of exposure to that in our portfolios. So this is our team. They're not broken out by sectors. They're not broken out by market caps or geography. They're really focused on these underlying technology platforms.
And interesting, who are they sharing their research with? You mentioned Twitter. Is it to
Yeah,
other?
so what we do, and if you go to our website, arc-invest.com, all of the research that we're producing is actually published on our website. So we have very detailed white papers. We have blog posts. We even have podcasts. So we had a podcast with Elon Musk a few months ago talking about the autonomous vehicle opportunity. So we typically invite experts in various fields. Each of our analysts have had these podcasts. They come out on a weekly basis. They're called FYI for your innovation.
Oh, wow. Very good.
And so we also have weekly kind of or Sunday newsletters that we push out, some of the breakthroughs in our research that the analysts have, just kind of a brief summary of what's going on. We also have stock commentaries, which we think is very important, especially for those investors that are owning our underlying ETFs, in that any stock that moves plus or minus 15%, we'll actually write up a commentary. This will be released every Friday on why the stock moved and how we feel about it. Has that changed our view? Have we added more? Have we reduced our position in the portfolio? So we're very transparent, and that's because, as I mentioned, we're actively managed ETFs. So we actually have to disclose our holdings every day, and that's fine for us because we want our investors to know exactly what we own. We're as we push this research out, we encourage others, especially in those fields that we're researching, to reach out and collaborate. We've collaborated with several industry experts, anybody from professors, academics, venture capitalist investors, entrepreneurs. We've partnered on writing some detailed white papers and release that to the public.
Wow.
So it really helps our investment process. It's actually kind of kind of the key role in our top-down research process, because this is kind of the ideation phase, this open research ecosystem where we're pushing out our research. And because when it comes to our bottom-up analysis, we're not using an index or a benchmark to screen for ideas, for stocks. We're actually using our research. So we spend a lot of time sizing these opportunities in the very specific, in these technology platforms that we're focused on. And really, a lot of the stocks come to us. It's the stocks that are investing aggressively now for the future. And so that's what we're really focused on.
Sounds good. Yeah, let's go ahead and dig in. I can't wait to hear.
Sure.
Yeah.
So I'll just give a quick background on Cathie Wood. She is our founder, majority owner, CEO, and CIO. So she oversees the 9 strategies that we have, including those 7 ETFs. She spent 12 years at AllianceBernstein. She was the CIO for Global Thematic Strategies. Prior to that, she worked at Jennison as a chief economist and a PM. And then prior to that, Capital Group. So her experience has actually been the last 2 decades, especially focused on innovation, but that's gone in her entire career is close to 40 years now. But so she has an economic background, but also focused on innovation. So that's really key when you're a firm kind of built on focusing solely on disruptive innovation. So what you see here is, so what we've seen the trends have been in the last decade or so is this shift to passive investing, more index-based investing. At the same time, you've seen a lot of investors, when they're searching for innovation, look for the private equity markets. And now you've seen, and the most recent numbers we've seen is roughly $1.1 trillion of committed capital sitting in cash on the sidelines looking for opportunities. And this is in the in the private equity venture capital space. So far too much capital chasing far too few opportunities. And so you've seen valuation in the private equity markets increase. And if you compare that to some of the comparable companies in the public equity space, specifically focused on innovation, some of the valuations in the private space are trading 5 to 10 times higher than some of the companies that we owned, and the companies we own are well positioned to take advantage of these large opportunities in the future. So these ETFs and these strategies. So we have just to give you, and I'll flip through real quick to all of it. These are our 7 ETFs that we have. That ARK Innovation ETF, ARKK, is our kind of flagship strategy. It covers kind of all the innovation platforms that we're focused on, which I'll discuss after our quick break. But what these other ETFs do, the ARK Web and Industrial Innovation and Genomic Revolution and FinTech, those 5 are actively managed. And so they're a little bit more focused, a little more narrowly focused, I should say. And they're really the subset portfolio or subset ETFs of this overarching ARK Innovation ETF. So that flagship strategy has $3.5 billion. It's our largest strategy, followed by our FinTech strategy, and then our Genomic Revolution strategy. So maybe I'll just pause there.
Brett, that sounds great. We're going to take a little break here. Greg Schnell from StockCharts.com will be at the Chicago Traders Expo tomorrow. So we're just going to share a little bit of information there, and we will be right back.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Chicago, July 21st through 23rd, dozens of the most respected traders in the world, including Rick Santelli, John Najarian, Tom Sosnoff, Linda Rashke, and Ralph Akampora, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, commodities, forex, futures, and cryptocurrencies. Claim your free pass to join them at chicagotradersexpo.com.
We are back. Very exciting here. We're going to dig in and take a closer look at these highly performing ETFs from ARK Invest. Renato, take it away.
So we'll just touch on some of the really the 5 innovation platforms that we're focused on investing in. And again, these are we think will be multi-trillion-dollar opportunities over the next 5, 10, even 20 years. And so our portfolio is constantly changing. This is a strategy that really you want to own for the long term, because it's not going to look like what it looked like a year ago or 2 years ago. It's going to be constantly changing and really centered around these 5 innovation platforms. So I'll just touch on each of them briefly, just so you get a sense of what these opportunities really are and what they mean for the future. So DNA sequencing is really centered around the cost of the whole human genome dropping significantly. It's actually dropped 1 millionfold over the last 15 years. If you go back to the early 2000s, the cost for a genome was $2.7 billion, and that took 13 years. Today, that cost has dropped to $1,000 to $2,000, and we expect that to continue to drop. By 2023, we think that cost will be $100 per genome.
Wow.
We think this will, you'll be going to your annual physical and getting your genome mapped because what does it tell you? It tells you it really is the read capability to identify mutations in your genome. And so we know that mutations are a precursor to disease. And so this will allow us to identify these mutations much sooner than when we actually develop some of these diseases like cancer. So this is a massive kind of technology platform that's also allowing other technologies to be built on top of that. One very interesting and technologies that we're focused on is CRISPR gene editing. So that's actually the right capability. So you're actually able to not only identify those mutations, but now you're actually able to edit those single cell mutations. And so there's 3 foundational there's 3 companies, publicly traded companies, all of which we own in our flagship strategy, that have those foundational patents for CRISPR gene editing technology. Wow. So they're in human trials today, going after monogenetic diseases, which, there's 10,000 diseases out there, monogenetic diseases out there. Only 5% actually have treatments or cures. And so they're going after a handful of those. And if this technology works, this could really be kind of the cure, or at least hold the key to curing disease. So very excited about that space. Mm-hmm. Energy storage is kind of the second innovation platform that we're focused on. And that's really focused around battery technology. So what we've seen is the cost of lithium ion, which is kind of the raw material that goes into batteries, is declining rapidly as well. There's actually a bend in the cost curve. And that's because of electric vehicles, which batteries are kind of the most expensive component of electric vehicles. Mm-hmm. Based on this cost decline for this technology, we're expecting within the next few years that electric vehicles will actually be priced below that of internal combustion engines. And so that will actually, you'll see a huge shift away from gas-powered vehicles to electric vehicle only. And so our expectations by 2023, we think 26 million electric vehicles will be sold. That's 5 times higher than what Bloomberg and other experts are saying or forecasting. Mm-hmm. If you go back to 2 or 3 years ago, they were forecasting 200,000 EVs to be sold. In fact, last year, 1.5 million were sold. So they're constantly revising their estimates upwards. And we really think that—
And that's right around the corner, 2 years from now.
This is not far around the corner.
And so we have Tesla, certainly the big player there. Do you see other players coming in?
Tesla's been really driving that cost curve downward with the Tesla vehicles. And so we think they are best positioned in the EV space. Now, there will be geographic monopolies, mm-hmm. Say in the US and China, Europe, Japan. So but we think Tesla is really positioned to be one of the key winners with the cost of their vehicles constantly declining. Kind of Elon Musk's master plan, part 1, is really to deliver a $35,000 electric vehicle. And he's mm-hmm. done that.
He has, yeah, indeed.
Yeah, the next part of that actually plays into kind of the robotics, which is autonomous vehicles. So we also think Tesla is one of the leaders in autonomous full self-driving vehicles. And, autonomous vehicles are robots. And so in this space, we're focused on robotics, automation, autonomous vehicles. We're also focused on collaborative robots, which if you're familiar with kind of industrial robots that you see in kind of the large auto manufacturing plants, these collaborative robots are actually now working alongside humans, no longer caged off, and they're very easily programmable. So no longer do you need, a very expensive computer engineer to program these robots. The software is much easier to use, and they can be programmed to do multiple tasks.
Great, and I'm sure there's certain industries that are going to benefit from that more than others.
Exactly. So these are, you're seeing more of them in Amazon warehouse, kind of picking objects in place. A lot of the tedious tasks that some humans do today. So this will make us more productive.
Sure, absolutely.
Actually create more opportunity to deliver.
And they don't talk your ear off.
Exactly. And they work, and they don't take lunch break or bathroom breaks. So that they are fully functional 24/7. And so this
fantastic. Yeah, these are really major disruptors. We're talking about big industries and big impacts going on here. That's amazing.
Absolutely. And what's driving a lot of this actually is artificial intelligence. So artificial intelligence is actually kind of converging with some of these other technologies. So that's leading to robotics getting better, and DNA sequencing getting better, and energy storage getting better. What we're focused on in artificial intelligence space is really deep learning. And that's taking the human element out of the equation when it comes to developing software. So no longer do you need to deploy hundreds or thousands of software developers. Now we have computers actually writing the code itself. So writing programs on its own. Again, this is leading to increased productivity longer term. And so it's a tool that we are going to be able to use as humans to make industries more efficient. And this will impact, we think, all industries. So if you think about like the internet and how it impacted most industries, and if you look at the total market cap attributable to all these internet-based companies, that was $10 trillion over the last 20 years. We expect deep learning and machine learning and AI to actually create 30 trillion worth of opportunities to these companies over the next year. So 3 times larger than the internet.
Very dynamic. Yes. So yeah, let's go ahead. I think, did you maybe have blockchain?
Real quick on blockchain.
Go right ahead.
This is probably one of the earliest of the technology platforms, but nonetheless, we think could be the most impactful and really kind of changing kind of the economic environment, especially when it comes to transferring wealth and mobile transfers and really frictionless transfers of capital and as stores of value as well. So we think this is a massive opportunity, and so we're focused on that as well.
Very good. So I think now we'll get into maybe a little bit more as far as the various ETFs and how our audience can take advantage of all of this incredibly dynamic, disruptive technology that is taking really the world, the economy by storm. As far as you mentioned, anytime you see productivity increased, you're going to see earnings pick up as a response, and subsequently the underlying stocks of those industries.
Yes, no, that's exactly true. And how it fits kind of in your broader portfolio, what you've seen is these ETFs have very low overlap with kind of the broader based indices. And many people kind of put us in kind of a sector bucket, which we're really much more than that. This could be actually broad exposure to a lot of the companies we believe will be disrupting some of the more traditional industries, like the energy sector and healthcare, more big pharma focused. If you compare us to even like say the NASDAQ, which is really dominated by the FANGs now, we have very, very little over exposure to those names. So this is serving as, it's really a technology enabled portfolio that's affecting multiple industries. So this is our ARKK, and this is our flagship portfolio or ETF. And this has very broad exposure to all of those 5 innovation platforms that I talked about. And you'll notice on the upper right-hand side of the screen this is how we don't think of sectors. We think of innovation platforms and these elements in technology. And so you'll notice 3D printing, gene therapy. We think these are the largest opportunities. We're doing this. This is really driven by our stock valuation. So kind of the two big mistakes that investors make when investing in technology or innovation is being too early. So that's why we center our research in around identifying these massive opportunities. So there's plenty of technologies that we haven't invested in because we couldn't get comfortable with the size of these opportunities and whether we're in kind of this prime time, like especially looking at kind of the cost declines associated with these technologies, because we're looking for technologies that we're going to see exponential growth in demand. That's a very important criteria for us.
Sure.
And then the second mistake most investors make is paying too much for these technologies. And you're certainly seeing that in the private equity markets. So we have a very detailed kind of valuation process to make sure that we're not overpaying for these companies. So that is really being driven. Our valuation work is driving this kind of portfolio composition. And you'll notice, again, back to my earlier point, in that this is just not a technology only, right? Healthcare actually is the largest sector because of the opportunities that we see there, and information technology second, and communication services third. In fact, IT was at one point the third largest. So it's really very diversified. Some of the Yep.
Oh, I didn't want time to elapse. I thought we could spend just a minute on how some of these investment advisors are utilizing your ETFs, how they are fitting into people's portfolio, and as far as their ability to add some dynamics to their holdings.
Sure. So this is really, again, the kind of a portfolio that's always looking 5 years out. And so we're investing in opportunities that we think our minimum hurdle rate of return is 15% annualized over 5 years. So every stock we own has to return, we believe will return 15% annualized over 5 years, essentially a doubling in the stock. And so as these companies graduate and start to become part of your these broader based indexes, which are part of your core portfolio, this serves as a hedge to that core portfolio. So these are names that you're not going to typically see, and they're the names that are really disrupting some of these core.
And I see Tesla up there at the forefront of the
Yes.
holdings. I'm just going to spend a minute here, if you don't mind. I'm going to review the charts. We like to look at charts here. So I'm going to review a chart of these various ETFs, give people an idea of their performance and just how wonderful they are performing and how very interesting they look right now. So what I have here on my screen is the ARKF. This is the fintech, and we can see that it's really holding up remarkably well, finding support at that upward trending 10-day simple moving average. We can move on to ARKG. This is the genomic revolution, and we talked about the Crispr, and we can see this year to date, this ETF is up almost 44%, and it's really just looking quite constructive as far as that chart holding up well, finding support. ARKQ, that is the robotics and the 3D printing, again, finding support, upward trending, very, very healthy and constructive looking. We can look at ARKK, this is the primary one, up 29% through June 30th. Again, all looking very, very much in uptrends. ARKW is the ARK Web, and those are the ETFs. We are going to leave it at that. But Renato, I want to thank you for sharing all of these insights. And for those of you that would like more information, you can go to arkinvest.com, and we will leave it at that. For those of you actively trading, happy trading.